Sup, freaks? It's your boy Marty here to introduce this episode of Tales from the Crypt. I sat down with Ethan Vera, hashrate merchant at Luxor Mining Pool, to talk about a bunch of things pertaining to Bitcoin mining specifically. We talked about how pools get shares from individual miners, how they divvy up that reward, the fees that they're taking, futures products that can help miners hedge, and a bunch of other stuff. This episode of Tales from the Crypt is brought to you by our good friends at the Cash App. Please excuse my son and niece in the background. We got a loaded family time here. And the Cash App's for families too. You got the Cash App downloaded on every family member's phone. They can have one. My niece and son don't have phones yet; they're too young. But when they're old enough, they will be downloading the Cash App because it allows you to stack Sats, send Sats, receive Sats, and you can DCA into Sats as well. Set it and forget it. You can buy Sats daily, weekly, bi-weekly, and if you're doing that, if you're DCAing into it, make sure you're sending those sats to personal storage at the end of the day. This is the revolution of Bitcoin. It allows you to take custody of your digital bearer asset. Make sure you're doing that after you stack sats on the Cash App. If you're tired of stacking sats, or if you prefer to stack slivers of stonks, you can also do that via Cash App investing if your favorite stonk is a little bit expensive, a little out of your price range. You can buy as little as $1 via Cash App investing. And because this is all connected to your bank account, there are no 4 to 5 day waiting periods. You can start investing today. The Cash App may even be your bank account. You can get an account number and a routing number and get your paychecks direct deposited into your bank account. Cash App Investing is a subsidiary of Square and member SIPC. As always, make sure you use the code STACKINGSATS when you download the Cash App. You're going to get $10, and $10 is going to go to our good friends at Owls Lacrosse. That's Owls Lacrosse. Download the Cash App today. Enjoy this episode with Ethan. Very, very informative, incredible conversation. Take care.
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven.
I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty Bent here on a beautiful Tuesday afternoon, Tuesday morning, where my guest is at, and we are here to talk about everything Bitcoin mining, from Bitcoin mining pools to hash rate futures contracts to the supply chain of miners. I'm very excited to be sitting down with Ethan Vera, hash rate merchant at Luxor Pool. How you doing today?
Doing well. Thanks for having me on, Marty. Been listening to your podcast since the first time I got into crypto, so extremely excited to be on.
Yes, and I butchered the name of your company. It's Luxor Mining. You guys run a mining pool and do a bunch of other stuff. You just launched a data website with some incredible data sets that we'll get into. I'm very happy to be sitting down with you. You're somebody that I've been getting more familiar with over the last 3 to 6 months, particularly as we've sort of been opening up what we're doing at Great American Mining and getting into more sort of focused conversations with people in the mining industry. I think your insight on what you guys are doing at Luxor and the sort of skill set and background you bring from a financing perspective and market making perspective at Goldman is very interesting. So just to start, why don't you tell us what you're doing before Luxor and how you came to join that team and start selling hash rate?
Merchanting hash rate. So like you mentioned, my background's mostly prior to mining was in financial services. So spent a bit of time in asset management at RBC, a bank up here in Canada on the public equity side. And then headed over to Goldman Sachs to do some investment banking in San Francisco and Hong Kong. Most of the time was spent in Hong Kong doing cross-border M&A. So helping North American companies buy Chinese and Asian assets and vice versa. That was kind of my first exposure to crypto and blockchain too. I was on the blockchain team there. There wasn't a lot of work being done at Goldman in regards to like investment banking in crypto because of how new the industry is. But we started really looking at the space back in 2017 and 2018 as some of the companies started listing to go public, companies like Bitmain. So that's really when we got dragged in at Goldman. For Luxor, we started the company about 3 years ago out of college. We were all really fascinated by Bitcoin at the time. And the thing that really stuck out to us about Bitcoin was that there's no longer a centrally planned Fed. No Fed that can decide, how much money to print and which companies get to win. You pointed that out on your newsletter this morning. Money flowing from small businesses during this, COVID situation to the large enterprises like Amazon. And so, in the Bitcoin model, anyone with a machine, internet, and electricity can take part in this new, more equitable minting process. Miners are essentially kind of the federal bankers of the future in a more just system and transparent one. So with that kind of interest in mind, we really were thinking, okay, what kind of businesses can we build in this space? And we built a mining pool, which is exactly a pivotal part of that ecosystem. Every day we have thousands of miners that sell us their hash rate for around 98% of the expected value of the hash rate. We then take that hash rate, build blocks with it, submit it to the network, and get paid as a result. So effectively, Luxor is, as it currently stands, is a wholesale buyer and refiner of hash rate. As we move forward and the team grows, we're working on making more transparent liquidation platforms for miners, and thinking through hash rate based derivatives, as well as adding data insights, which you mentioned earlier too as well.
Yes, I misspoke earlier when I said you're selling hash rate. You were buying hash rate. A little mixed up there. So let's dive into the dynamics of a mining pool. How does your business model work? You said you're buying it from miners for the 98.5% expected value of the hash rate. So you guys are getting 1.5% around there from. You're taking that off the top just for coordinating and pooling this hash so that they can get a more consistent payout.
Exactly. And that's really the reason miners will sell hash rate to a mining pool versus self-mine, is because they don't want to deal with the luck variant. Running a pool, I know how much mining luck really sucks, and it can be painful at times, especially where your costs are set, your electricity bill. But if your revenue is unpredictable, you could get into a tough economic situation there. So that's why miners join or sell their hash rate to a mining pool. Mining pools really are just buyers of hash rate. They buy up hash rate from individual miners, and then they sell it to the network. So you can think of them really as a middleman between a producer of hash rate and the end consumer, which is the Bitcoin network or other proof of work chains. In this case, mining pools have historically, they've been around for about 7 years. Slushpool created the first ever one just over 7 years ago. And since then, it's been evolving pretty rapidly. Now, 95% or so of the industry works on what's called a pay per share method, where you're paying on the expected value, and you as the pool are going out and actually making the actual value. So your spread is between the expected value and the actual value. It's kind of like a blackjack table in a sense, where over the long run, as the house, we know our odds are set. We're going to make that spread. But in the short run, there's going to be huge fluctuations where the mining luck is all over the place, and we could be down a lot or we could be up a lot.
Yeah. So let's dive even further into mechanics. You mentioned shares there. So each individual miner is sending shares to your pool. What does that mean by sending shares? And how do you calculate that? And then basically calculate each individual miner's sort of percentage of the payouts.
Yeah, so mining machines produce hashes, so they're running through the hash function, SHA-256. But some of these machines produce, all of them produce trillions of hashes a second. So if you're looking at Bitmain S9, that's 13.5 trillion hashes a second. as a mining pool, we don't want to accept 13.5 trillion hashes per second. We couldn't. I mean, our server cost would be 10 million. So what we do is we set a minimum difficulty called a share target, and basically only once your hash rate beats this target, then we accept it as a valid share. And the goal is that you as a miner, you're only submitting a share to us every 5 seconds, and so that we can constantly manage the amount of data coming into our servers. So anytime you submit a valid share to us, we immediately credit you the expected value of that share. So the most simple definition would be like, if you're sending us a lottery ticket and there's the lottery is worth $100, there's 100 tickets outstanding and you're sending us one, we'll credit you $1 right away because that's the expected value of that share. So as miners, they're just sending us shares every 5 seconds and we're just consistently crediting them based on the expected value.
Yeah, that's fascinating how this all works, and how pools sort of naturally came together. You mentioned Slush developing the first one 7 years ago at this point. And I mean, it just makes sense for individual miners to contribute to a pool based on payout variability. And so I guess that drives naturally into another question, is these mining pool protocols right now, I'm assuming you're using Stratum, your original protocol, or the most popular protocol. Slushpool and the Brains team is working on launching Stratum v2, and the reason for doing that is sort of a piggyback on Matt Corallo's Better Hash idea, which we've talked about on this podcast quite a lot in the past, and essentially its aim is to help decentralize Bitcoin mining a little bit further by allowing the individual miners within the pool to construct block templates. What are your views on how this could potentially work, and how it would compare to the Stratum protocol you're using now?
Yeah, it's fascinating the work they're doing, Matt and the Brains team. Really, before we jump into it, shout out to Slushpool and Brains team. They've been carrying a lot of the R&D in the mining space for a long time. So really hoping that they are still in a position, financially, that they can continue to do that. And they've been really great for the ecosystem. I guess there's quite a few considerations that come with Stratum v2 beyond the job negotiation part, like efficiency and stuff, but definitely that decentralization of mining job negotiation is what is the primary focus and the really innovative aspect of it, the better hash aspect. I think that's really cool. I would like to see that to fruition. It makes a lot of sense to decentralize the power out of the mining pool's hands. But I think I'm generally bearish that it'll actually be adopted on a wide scale. And Slushpool really only has 4 or 5% of the network right now. 94% of it's controlled by other Chinese mining pools. And I don't think any of those mining pools are incentivized to use Stratum v2. So I think it'll be kind of more of a fringe protocol at this stage, unless the Brains team can find some way to financially incentivize the Chinese pools from adopting it.
Yeah, it's the big question. Is in conversations with Matt, for Better Hash at least, I haven't talked to him about Stratum v2 in a little bit, in quite a while, but at least when we were talking about Better Hash, he was under the impression you probably need like 5 to 7% of hash rate to bootstrap it for the variability of payouts to be worthwhile. And yeah, I guess that's the big question with Stratum v2 is how do you bootstrap it, and especially since it's a new protocol. And I guess the biggest knock on Stratum v2 is whether or not the individual miners within that mining pool protocol would be able to fine-tune their individual setups to get as many fees as possible. That's a big holdup, correct?
Yeah, exactly. It's kind of unclear what will happen. Like maybe they're incentivized to mine empty blocks. We haven't really seen it at large scale yet, but you would think that putting it into the miners' hands would completely make it economical. So they're going to do whatever economics makes sense. Right now, mining pools already try and do that by including the highest value transactions, but it's unclear if like that's the case where they just mine empty blocks and quickly get them. But I think we'll see. Slushpool has already launched it if you run their BOS Plus. So we're going to start having some sample data to go by here to start observing what effect it has on miner decisions and how many actually use it. You know, it's only an option, right? So many miners actually probably will not do anything. They just want to plug and play. And maybe the real benefit of it is just in situation where somebody like CZ wants to reorg the chain, and then, you know, he doesn't need to go and bribe Poolin and Bitmain because it gets blocked by the miners. I don't know.
Well, Binance has their own pool now, correct?
Yeah, they're about, I think last time I checked, like 7% of the network hash rate.
Yeah. But that whole not even a fiasco, it was more of a publicity stunt than anything, in my opinion. Like, I don't think CZ could have done anything. He was talking about coordinating with miners, but really at that point it would have been really hard to reorg the chain, and I think a lot of people made a lot more of a stink than was warranted. I think it was all talk and no substance to the actual threat of doing it.
I agree. The mining pool operators like Poolin, Bitmain, F2 Pool, they're all, well, majority Bitcoiners. I guess there's some Bitcoin cashers there too in Bitmain's ranks, but I don't think they'd go through with anything like this. And that's really what makes proof of work such a beautiful consensus mechanism, is that it economically incentivizes and aligns the actors from protecting the network. You don't actually need responsible guardians to protect the network. You just need people to be financially motivated, and no company is going to go and attack something that they are invested in. So I think the company-wide attacks on the network are actually very low. My concern is always more on the government, which is the majority of attacks in the world come from the government. So that's probably the area that keeps me up at night, is how much hash rate is managed in China. There's 3 pool operators that manage over 51% of the network in China. At any point in time, the CCP could potentially go and seize those 3 individuals that all live in Beijing with their laptops and have over 51% of the network. And an attack on mining pools is actually, in my opinion, more likely than an attack on mining farms. Seizing mining farms would be pretty dirty. Like, you have to go roll tanks down into Sichuan province and take over physical production of hash rate. That's like a huge mess, especially at a time where China is actively trying to attract foreign investment into their sectors. Like, that's the last thing they want to do right now. Whereas a mining pool attack, they could just quickly round up 3 individuals and pretty, cleanly attack the network. And that's pretty scary.
It is scary. Maybe that's why we need warrant canaries at the mining pool level, so they can, so the pool operators can warn their users if they've been compromised, and those individual miners can move. That would be probably a boon for your business. You'd see miners en masse leave for other pools like Luxor, but like how much of the hash rate contributed to those pools in China is also within the borders of China? I guess would be the next question.
It's often cited that like 65% of hash rate is produced in China, but 95% is managed in China. So there's 30% of hash rate in the network that's produced in CIS region, North America, Europe, South America, that's produced out offshore, but then still managed by mainland entities.
Yeah, it's great. I've said this on a few episodes in the past, like, considering the fact that China is a communist government, it is pretty ironic and actually like very impressive to see the amount of entrepreneurial spirit that exists in China around Bitcoin and Bitcoin mining particularly. Like, you'd think the citizens of China wouldn't be first movers in this purely capitalistic market that is the Bitcoin network, but I mean, they put everybody else in the world to shame when it comes to this stuff.
Yeah, Chinese mining companies have done the most for the network. They've created the best machines. They've added the most hash rate. They've secured the network, the most out of any country. So, hats off to them. Well, I think people forget like how entrepreneurial the Chinese people can be. Like they were the creators of like gunpowder, literature, writing. Like all the early like technologies were created by China. They're really a powerful people if they're in the right environment. Unfortunately, the CCP has really suppressed their innovation over the past 60, 70 years. And you can see that, like, if you pull up like a Wikipedia page on Chinese inventions past 70 years, there's like nothing. Like, it's shameful. Maybe crypto mining, maybe like 5G is like the time where China will actually lead in technology advancement in the past 70 years. But to date, there's been very little innovation coming out of there. And I think that's mostly the fault of the government. They have very smart, intelligent people. Like, they just got to step out of the way and let them do their thing.
Yeah, I mean, this is very evident today, particularly when the UK stepped away from the I always pronounce it wrong. Huawei. They stepped away from that contract. They don't want Huawei to come in and build their 5G network.
Yeah, the CFO is actually on house arrest about one district away from me right now.
Really?
She lives in a mansion in Vancouver with like an ankle monitor. Yeah, in Canada, we arrested her, and then China retaliated and arrested like a few Canadians, put them away. No one's ever heard, like, they've been living in like a dungeon pretty much.
I wasn't aware of this story. Why did Canada house arrest put her on house arrest?
Extradition law with the U.S. She broke U.S. Sanction laws, and Canada has extradited. Like, we basically arrested her in our airport. So we got in the middle between U.S. and China, the war, and so Canada's kind of caught in the middle of it right now. Which is funny because we have so many Chinese citizens here. Like, Vancouver is pretty much half Chinese at this point. Like, Li Ka-shing built half the city. But now we're like another enemy of China, I guess.
Such weird times. It is. I mean, right? And the rhetoric's only getting more heated, particularly between the U.S. and China right now. And yeah, it does suck that the CCP gets in the way, because as we're talking, like, the entrepreneurial spirit from the individuals within China is incredible, especially in Bitcoin. But it is hard to do and that was going around yesterday too, like the NBA and the Free Hong Kong stuff on the back of the jerseys, like that type of overt censorship of American companies and American organizations via Chinese pressures, like, that doesn't sit well with me at all. So are we at a point where we need to play hardball with China and sort of pull out from economic investment just to help not help the individuals, I'm sure they already know it, but to sort of put pressure on the CCP and bleed them out, if you will? I'm just speaking aloud right now.
Yeah. If you're into the Chinese-American relations, I'd recommend the book On China by Kissinger. He's like a student of history, and he was under Nixon and tasked with bringing back together China and the U.S. into good relationships. And in his book, he covers like every single external country's policy with China over the years. So how they basically opened China up through the opium wars and got them to start trading with the outside world. I think a lot can be learned about the Chinese mentality through studying that history. The Chinese really play a long-term game, kind of like Sun Tzu, Art of War. The West is like, we see like very decisive points of victory, landing on D-Day or sacking Berlin, which can be replicated in the game of chess, which is a Western-dominated game where, you take the king and there's very hierarchy and there's very strong points of conflict, versus the Chinese see international policy is much more fluid than that and long-term, where it's like a game of, expanding territory, expanding influence, and getting marginal areas of advantage, which is replicated in the game of Go, where you can win by just having like a slight advantage in it. You don't have to, take the king or anything. So I think that book's just fascinating when thinking through like how the Chinese government does foreign policy.
Yeah, I mean, it's become extremely evident this year, particularly 2020 has been a year of chaos, but also of shining light on how the slow drip Chinese influence has infiltrated the U.S., particularly like the university system having a lot of paid professors that are working on behalf of some Chinese institutions, yet not making the universities they work for aware of that. I just mentioned Huawei and the UK, and they have the infrastructure projects in Africa and Italy and other sort of distressed countries, and this whole pandemic with the lockdowns. There's some games with ventilators and a lot of questions of the positioning of China and how this benefits them because they're able to step in and offer aid during this pandemic and get more influence that way. And then had Kyle Bass on the podcast a few months ago. He was describing how we may be witnessing like reverse opium wars with the fentanyl coming into the country and the control of our medicine, predominantly in China's supply chain. It's very fascinating. And it is two very diametrically opposed sort of views on the world. And as a Bitcoiner, like the long-term thinking makes a lot of sense to me. I mean, I think a lot of the vitriol and chaos that we're seeing in the United States right now in terms of the culture war is due to an extended, decades-long sort of infiltration of academic thought in our university system.
Yeah, I agree with that. We're getting deep here.
We are. Ethan, this is Tales from the Crypt. We dive deep.
I actually heard of a few mining farms getting a supply of masks with their Asic rigs. I don't know if you guys got the same, but I heard What's Miner and even Canon were sending like hundreds of masks with a few dozen machines.
Really? I don't think our last order came with masks, but it'll be interesting to see if our next one does.
Yeah, just write free Hong Kong on them and you get it.
Had to send them out of the country. I hate to do this to break the flow of this conversation, but I'm an idiot. Forgot my laptop charger. I'm going to go grab that real quick. It should be 30 seconds. I'll be right back.
Yeah, no rush.
.30 seconds on the dot. Wow, that was good. But obviously we're on this conversation of the geopolitical situation between the East and the West. But let's bring it back to Bitcoin hash rate particularly. Like if 65% of hash rate is physically in China, and then 95% of control over hash rate is in pools or operators within China, how do we begin migrating this and distributing this more outside of Chinese borders? Not even particularly here in America, but just globally.
On the production level, so that 65% number, I think naturally like about 10% of that will come from over from China to the US in the next few years. And there's a lot of key drivers to that. A few are like, we actually have superior energy infrastructure here. There's this common misunderstanding that China has better and cheaper sources of electricity, which isn't entirely accurate. It's true that Sichuan and has cheap hydropower because they overbuilt it, and Xinjiang also has an abundance of power, but their costs are still at minimum like 2 to 3 cent USD per kilowatt hour, even in the height of rainy season. The US has more advanced electricity grid infrastructure that can be utilized for mining at low cost. And you're seeing that now with like the build out in Texas. It's a lot of people building out at like sub 2 cent. Also, you guys at GAM, like, what you guys are doing, leveraging existing infrastructure resources, I think that's super cool. So I think naturally, actually, while China had a head start in that cheap electricity, we're actually going to catch up pretty quickly here. Some of the other like key themes, we could probably have a whole podcast on this, but the other like quickly key themes I'd point out are like longer machine life cycle. So it's less important now to plug it in within the first 2 weeks of it being made, which benefits US companies and overseas ones. I think one that's not talked about a lot is the professionalization of the industry. Historically, like, it's been incredibly unprofessional. Like, if you wanted to get involved in mining, you had to like go to a manufacturer. You have no idea how they're pricing the machines. You don't know if they're actually going to get delivered or what time. Maybe they mined on them themselves already. There's no warranty for them. Then you have to connect to a pool. You don't know if that pool is stealing from you. It's incredibly like opaque. And so that's really kept North American institutional money on the sideline. We don't like dealing with that unprofessional level of an industry, whereas the Chinese are actually less risk adverse, and they're comfortable dealing in that type of environment. So they've been able to put in capital where I think a lot of investors, at least in North America and the US, have been kind of like sidelined because they're like, wow, there's all these things that are like really unprofessional. So the manufacturers kind of getting their, becoming more professional by like putting in warranties, having more transparency on shipping, that sort of thing, that's going to help, as well as like hash rate liquidation and like actually knowing where the value of your hash rate comes from. I think that will help. So those are like some of the key themes. I think like there's quite a few more, but eventually like more hash rate production is going to come to the US and really outside of China, I think.
I agree. And I think the point that the industry is just becoming much more professional is very true. And just from conversations we're having at GAM, there is a lot of interest, particularly in the oil and gas industry, to figure out how to plug Bitcoin miners into their existing infrastructure. And more pools popping up too is good to see, like Luxor, and it'll be interesting to see if that Laurentia pool can get off the ground as well. Here in North America, we got Nova Block up in Canada as well. They're a North American pool. That'll be interesting too. And you alluded to the fact that in the past you wouldn't know if a mining pool was stealing some of your hash rate or not. How would that happen? And how would you know if it's happening or not know it's happening?
It would really be done like not as much stealing hash rate, but not paying out as much as they should. So if we say we're going to pay you out 98% of the expected value and you're expecting that, it would be quite easy for a pool to actually just pay out like 96% or 97%. And there's even sneakier ways pools can do it, where when you connect miners to them for testing, it has the correct pool fee and it's paying you out the right amount. But as your operations go on, slowly like basis points get tacked on as you've already kind of transitioned miners. So it can get quite sneaky. There are ways to measure like, is a pool paying you out correctly for your hash rate, but it's extremely hard to do. You need sophisticated programs to do it. So some of our bigger miners run it with us, and we help them set that up. But for the average individual, it's just not feasible. Really, this is like, if you take a step back and look at how hash rate's traded right now, miners are sellers of hash rate and mining pools are buyers. It's an OTC marketplace where you as a miner, you need to go negotiate with a mining pool, usually for a special fee. If you're a certain size, you go to F2 pool, you go to pool, and you go to Slush. Like, hey, what fee can I get? I have 100 petahash type thing. You engage in an OTC transaction where you're doing one-on-one negotiation with them and then just trust that they're paying you out a good amount. They quote you like a fee on Telegram or WeChat, but you don't really know what that fee is based on. People can have like different bases for what they're charging that fee on. So the current structure is like all wrong, in my opinion. It was fine for the beginning of the industry, but I think we need to move to an ecosystem where there's more transparency. on hash rate. And that's really like the idea of creating hash rate marketplaces, where instead of going and negotiating with F2Pool 101, you go to an exchange and F2Pool has to bid on your hash rate. You can be like, F2Pool is bidding 8.1 cents a terahash for 500 petahash. Poolin's bidding, 8.05 for 300 petahash. And that's how the market can be formed. And then you as a miner, you really know, okay, I'm getting paid 8.1 cents a terahash because it's in an open marketplace and it can see the order book.
Yeah, and I guess that's the huge question right now is how is that market going to get made? Who's going to be the exchange or the platform that sort of bridges these two sides and creates an order book that has enough liquidity and interest to actually facilitate this type of market? There's a lot of debate back and forth whether or not this will happen in the next 3 to 5 years. What are your opinions on who might this market maker be and how these order books may develop?
I think and hope that it'll be a few different people and there'll be a few different exchanges. Hopefully there'll be like a US based exchange. There'll be a European and a couple Chinese ones similar to like crypto markets today. I think that's healthier for the ecosystem if there's multiple exchanges for hash rate. But like you said, like it is tough because mining pools have long benefited from how opaque the industry is. So they're not very incentivized to go and change an ecosystem that they benefited from and profited from. So it needs to be done in a way that incentivizes them to use the exchange and start participating. Maybe it takes 5 years, but I would hope that over the next like year and a half, people will start realizing this. I think profit switching is really kind of the first area that's going to change people's minds on hash rate. You start getting into this era where you realize that hash rate itself has value and can be used for multiple purposes. Of course, like for SHA-256, it would be used in majority cases for mining Bitcoin, but it can be used for other things like mining, BCH, mining Digibyte, dozens of other currencies. And so you get into this idea where hash rate itself can be bought at higher than a PPS rate. And at the end of the day, most miners are profit driven. So if you can sell your hash rate at 101% Bitcoin PPS rate, that's pretty impactful for a business that's operating at the margin. So I think as we transition to an era of profit switching, it's going to become more clear how then that goes to an exchange where not only are you selling to Bitcoin and other crypto networks, but you're also selling to other buyers too.
A multi-coin future is so how viable is that in the long term, do you think? Yeah, is there, because I often wonder this, a conversation of zombie chains and dead chains and do blockchains ever die? It's a big one John Seth and DeRose used to talk about, pops up. And so with this profit switching model, you're sort of dependent on these networks having value and adoption and longevity into the future. Again, if you're somebody who believes that Bitcoin will be winner take most to all at the end of the day, like, does that make sense long term in your opinion? How does that sort of play out?
I'm of the belief that Bitcoin will take most in terms of its use case, which is really like store value and really like a decentralized currency. But I also see Bitcoin as religion. And as any religion, there's always kind of like an antichrist. So right now that's BCH and BSV. Maybe those chains fail and probably at least one of them will. But then there'll be like another Craig Wright in 5 years that creates, I don't know, BTTC or something in that nature, right? Like there's always going to be like an anti-Bitcoin, regardless if these ones fail or not. So I think like long-term Bitcoin will be 95% or more of SHA-256 hash rate for sure, but there'll always be these kind of smaller chains that exist. And this type of future may actually lead to the demise of some of these smaller chains. If there's like a period of profit switching, that could really hurt smaller chains. And then if there's a period of where most hash rate is traded on exchanges, it makes these smaller chains incredibly vulnerable to attack, because you don't have to invest in infrastructure to buy machines. You can just buy hash rate, buy a few exahash, and attack Bitcoin Cash pretty easily. And if you manage to put in like a very leveraged short position, it could make sense economically for you to do so. Of course, then you have to deal with like, how do you actually get the coins out and stuff. But I think it's possible.
Yeah. No, I mean, the game theoretical situations that come into play when you're thinking about hash rates and moving it between chains and attacking chains is a fascinating world to fall down. And yeah, I mean, to be successful, number one, you have to have those futures markets. So it's like, is there even like a BSV futures market? Could you really attack that profitably? Is there I don't know. Are they on BitMEX? I know Bcash is, but
I don't know about BSV. I mean, if there is, I'll probably go after this pot and short it. But and I think this could get into a cool period where like an exchange is the one who usually gets attacked by these double spends. So an exchange would actually be then motivated to go and buy more hash rate than the attacker. And you get into this interesting game theory where they're just upping each other's bid on the amount of hash rate to either attack the exchange or protect the attack. And eventually it gets to a point where they're both negative and they both lose a ton of money. And the only person who wins are the miners, who are the ones selling the bullets.
yeah, and I guess, so we're getting at there's an argument to be made that this profit switching could actually be beneficial for Bitcoin in the long run because it can provide miners with more profits, which they could reinvest in the security of the network.
I think so. I think it's just ultimately a better and more transparent way to sell hash rate. So institutions that want to enter the space in North America, like anyone with capital, I don't just mean like large corporations, because I think there's so much more to that than in Bitcoin mining, but anyone like with capital that wants to invest, like dealing with the OTC marketplace with mining pools right now is kind of daunting. And so I do foresee like having better liquidation platforms as a good catalyst for bringing in more money into mining, securing the network more, and bringing more hash rate to the US.
Mm-hmm. So in terms of helping this market develop, and again, it's incentives. These pools have to be incentivized to actually participate in these order books and sort of give up reins of control of their individual order books to a larger exchange. Is there financial incentives with being more transparent? Do you think individual miners pointing their hash at pools will look at transparent pools and find that they're more profitable ways because of their transparency? Is that part of your thesis at all?
I think mining pools that develop profit switching algorithms will be at an advantage in the future because they'll be willing to pay more for hash rate than other mining pools. And this could be like a reason why North American pools take off more, because historically, like you mentioned earlier, like China's dominated mining, but the West dominates quant funds. So really what profit switching is doing is bringing that quant aspect into mining. So there could be like, a trading desk in Chicago that runs a very sophisticated profit switching algorithm that can suddenly generate more uplift than someone like, Antpool, and they'd be willing to pay more for hash rate. And in an environment like that, they could actually gather more hash rate on a trading desk than, a giant mining farm or a giant mining pool, giant in China. So I think people who are smarter about that will benefit in the future. And I'm fascinated to see like who the new types of players are in that future system.
Yeah, and that drives us to an interesting question of how does this affect the cadence of block production? If you're profit switching with a material amount of hash rate, what does that mean for the 10-minute block target over time?
It really depends like how many people are profit switching and how dumb those algorithms are. If you take like an extreme example where 100% of the network is profit switching and the algorithms are very unsophisticated, they switch to Bitcoin Cash when it's 5% more profitable to mine than Bitcoin. That's the only factor they look at. Well, if Bitcoin Cash goes over 5%, technically, like 120 exahash would switch over to Bitcoin Cash to mine that block. And then there'd be 0 left on the Bitcoin network until Bitcoin Cash difficulty adjusts, and then it would switch back. So in that very, very extreme example, which I think is highly unlikely, that would have a huge effect on block time for Bitcoin network, and would be very damaging. I think those algorithms will be a lot smarter than that. We run a smart switching algorithm right now, and we really try and consider like what are the market factors and like what's going to be the most profitable to switch to on a post-switch basis, not on a pre-switch basis. So I'm hoping that companies can develop more sophisticated ones than that. But it'll be curious. I'm curious to see it. I think it'll have a larger impact on the smaller chains like Bitcoin Cash, BSV. Those chains could run into some problems as all the hash rate comes on, jacks up the difficulty to an extremely high level, then leaves, and then leaves the existing miners to find some really bad block. And those miners, like besides maybe like Roger Ver's mining farms and Craig Wright's, like they don't want to stay on the. Everyone else does want to stay on the network. They're not going to mine very unprofitably. They're going to go to Bitcoin, so it'll just make that cycle even worse.
Yeah, no, I'd imagine it could potentially, that's what could be the demise of those networks if that scenario, very extreme scenario, played out. And it was, actually, I don't know what Bcash's difficulty adjusted. They changed it, didn't they? So isn't it like every 16 blocks or something like that now?
I'm not a big Bcasher, and we don't run a pool for Bcash, so I don't know too much about their proof of work algorithm. But I thought it was every day.
Yeah, it might be every day, maybe every 144 blocks. I think that's what it might be.
I don't like changing the Bitcoin, like the original design. I think that like keeping it is what's so fundamental and important to it. But in reality, like the difficulty adjustment algorithm for Bitcoin really sucks. Like 2016 blocks is just it doesn't make sense. You see like chains like Zcash doing it every block, or even chains like Komodo Chain doing it interblock, and it makes it much more efficient. But I mean, that's the beauty of Bitcoin, is that it doesn't change, and it's a point of stability.
So 2016 blocks is way too long in your opinion. I'm trying to think of why Satoshi chose that in the beginning. It's like 2 weeks. But isn't there advantages of 2016 blocks as well?
I just see the like changing every block it's more fluid and takes away all these different issues. Like, okay, the mining death spiral is obviously a stupid argument, but that would have 0 weight if there was adjustment like inner block or every block. Potentially there's benefits of like 2016 I'm not thinking of, but I like the inner block changes. It's called like adaptive proof of work. But maybe Satoshi didn't envision what this like mining ecosystem would build. We're moving into an era of profit switching and hash rate exchanges. It hasn't really been done in a big way in the past 7 years since Slushpool was first built. So this industry is going to go through rapid transformation that no one really predicted, not even the pool operators a few years ago. It's I think it's going to happen regardless if one individual wants it to or not. It's just like it's going to be fascinating to watch all the different like repercussions it has.
That drives us towards an interesting point that a lot of people, especially on Bitcoin Twitter, like to make, like, oh, I don't know how I feel about the financialization of Bitcoin, particularly. Like, are we just recreating what we're trying to get away from? And as somebody who sort of understands finance, I mean, I think these products are necessary if we want Bitcoin to succeed as much as we believe it can. But what would you say to the hardcore? Well, I mean, it's not even hardcore, but Bitcoin doesn't succeed if it doesn't suit the use case of black market money. But with people who are hyper focused on that use case as Bitcoin as black market money. Like, how could you quell any fears of traditional financial institutions and sort of familiar financial products coming to the Bitcoin world?
I don't know if I'd ever be able to convince, the very, very hardcore Bitcoiners that some centralized services are beneficial to the ecosystem. But my general view is that, like, the beautiful thing about Bitcoin is that it's censorship resistant at its base level. And so really, like, we don't make any changes to the coin itself. That's a beautiful thing. But there are going to be centralized companies that are building on top of it that will add to the security of it, the usability of it, the adoption of it. Those centralized companies are kind of a necessity because we're not in a place right now where decentralized products or companies provide a better user experience than centralized. You can't really build a lot of these products like a hash exchange or hash rate derivatives decentralized that's going to be a better user experience than centralized. It just doesn't exist yet. And so maybe in the short term, like the next 5 to 10 years, all these services are centralized, and it adds to the security of the Bitcoin network. But then hopefully later down the line, I hope the same vision as them, that in 10 years, they become more decentralized once we can figure out the user experience, which, like, at the end of the day, that's all people care about, right? Like, can you build a better UX? And so if you have like a hash rate exchange that's decentralized, doesn't have market making, there's like no liquidity, like the product's just not good. No one's going to use it. You're going to want to go to a centralized exchange. So I know I'm kind of like dancing around the question here, but I think like these products are fine in the short to midterm. Like, we're building better security for the Bitcoin network. Yes, they're centralized, but eventually, hopefully they don't, they become more decentralized.
No, and I would agree. I think decentralization and being as distributed as possible are ideals that you strive for, and you get closer to those ideals incrementally. And then, as somebody who's been diving down the mining rabbit hole pretty intensely over the last 2 years, and somebody who works at a company that's mining Bitcoin, like, the capital expenditure that goes into building out these mining operations is pretty considerable. And so if we want hash rate to keep going up exponentially and people to invest in buying miners and pointing their hash rate towards the Bitcoin network, like, these products probably need to exist if we want to take it to the next step. You need to be able to hedge the risk that you're taking this initial CapEx expenditure, because it is considerable and it is a huge risk.
Exactly. And every other industry, like traditional industry, commodity producers can hedge their risk. So like what we're talking about isn't crazy. Like there wouldn't be the oil industry there is today, or the gold industry, or any, hog mix industry there is today if there wasn't futures and options and financial tools for those producers to hedge their risk. So we really need to get into a space where miners can hedge the value of their hash rate, the commodity which they're producing. And like you said, like miners are making incredible amounts of investments, sometimes millions of dollars. And if you're investing in a commodity that's very volatile without a hedge, it's a very different investment than if you have hedged out your risks. The value of hash rate is about 3 times more volatile than Bitcoin price itself. So miners take a 3 times more volatile position than holders of Bitcoin, just by the value of hash rate in a year's time. That's a big risk to take, and it sidelines a lot of institutional and good capital in the U.S. So I think like building these hash rate based hedging tools is going to be essential to North American adoption.
No, I agree. And I guess let's get into the mechanics of hedging and how an operation would hedge their risks, particularly with hash rate futures. How do you envision miners using these markets to hedge their operational risk?
Yeah, there's been a lot of talk of hedging in the past year and a half. Maybe I'll just set the stage before we jump into it. But the first approach people took was around like network difficulty, and you saw that with like PowerSwap. I think Jack Mullers came onto your podcast to talk about it. BitUda has done some difficulty-based swaps. Now FTX has exchange-traded difficulty products. Those products are actually a little bit ill-conceived. They're actually not. They don't work as a hedge for miners. There's more than one input that goes into the revenue that a miner generates, and so hedging difficulty breaks in a lot of cases. An example of that is like the March sell-off of Bitcoin price. The value of hash rate dropped 40%. So miners lost 40% of their revenue. If you as a miner tried to hedge your risk through a difficulty swap or a future, you're going to go long difficulty, right? Because technically, if difficulty increases, your revenue decreases. So that's the hedge position you take. But in March, you would have been double screwed. Your value of hash rate dropped 40%, but difficulty also dropped, which means your future position on difficulty also lost. So that's one example, but it's broken like dozens of times already this year. So while those difficulty products I think are interesting, they're actually not that useful as a hedge for miners. Miners produce SHA-256 hash rate. That's what the machine actually produces, and that's what miners make their revenue in is, dollars per terahash. So the only way to properly hedge your operations is to do it on the value of hash rate itself. And just for simplicity, I would call that like dollars per terahash per day.
Yeah, and just after hearing that explanation, it makes a lot more sense, right? Because what are these machines producing? These hashes. The difficulty is more variable and unknown, more of a variable and an unknown than the amount of hash each machine can produce. Like you can easily predict that, no matter what the difficulty is.
Exactly, yeah, and that's how miners make revenue, right? Like you don't care about the difficulty, you care about your dollars per terahash. Because difficulty could be up, but Bitcoin's also up, and you're fine. At the end of the day, like you care about your dollars for the commodity you're producing.
Yeah, and that's an example of this industry getting more sophisticated too. Is honing in on the metrics and the sort of data that you should be paying attention to and basing future decisions off of, where it seemed really shoot from the hip, Wild West in the past, like you were describing, sort of trying to negotiate with the hardware producers who you don't know whether or not they were running the machines or had some hidden firmware that could over or underclock them, and or just steal hash rate straight up. And so I guess that's another thing we get into is the efficiency of the hardware and the ability to under and overclock and make some firmware tweaks to eke more out of each miners. Like, do you guys? I know Slush offers some special firmware for S9s and are probably working on other models as well. Do you guys at Luxor look at that and try to provide that to your customers as well?
We do for Equihash, being like Zcash, but I don't want to spend too much time talking about shitcoins on your podcast, so I'll put that in the back burner. I think what Slushpool is doing with BOS Plus, the firmware for the Bitcoin miners, is interesting. It makes a lot of sense to combine their mining pool stack with firmware and bundle it up and sell it as a package deal to miners. It's very attractive. The firmware space has been probably, on the topic of professionalism, the most unprofessional to date. Like you're looking at guys like Alex Levin or Ganesh, like no-name guys on Telegram that you like probably have never met in person, and you're handing over like all your machines to their firmware. And so people have been pretty skeptical of it to date. So people like Brains coming out with more professionalized version of it, I think is going to be very impactful, both from a mining perspective, but also from a general market. People look at like the hash rate levels right now, and they're trying to predict, okay, what's it going to be in 12 months? Well, if you're ignoring firmware, you're doing yourself a disservice, because firmware hasn't really penetrated China at all yet. They've been really skeptical of it, but it's starting to gain traction there. So if all those Chinese miners start putting in firmware that overclocks their machines by 15-20%, you could see another 20 exahash come onto the network from just firmware upgrades. And so if you're making a mining investment or betting on future difficulty levels as an investor, you should probably take that into consideration.
Yeah. And so let's take a step back here for the freaks who may be unaware of sort of the mechanics of the hardware and how the firmware interacts with it. What do we mean when we're saying add new firmware and over or underclock?
Really what these companies are doing is they're breaking into the machine and putting custom firmware on it that's not the pre-configured manufacturer's firmware. The machine comes with generalized firmware from the manufacturer, but it doesn't allow you to do things like heavily overclock the machine, which is beneficial from a hash rate perspective, but also increases the risk of failure. So what these firmware guys are doing are basically breaking in, creating custom firmware and overwriting it and allowing you to do things like increase the amount of hash rate it produces, or in some cases like undervolting it and increase the efficiency, which we see a lot of people doing with the older generation machines like the S9s. If you undervolt it, you can get higher efficiency, like joules per terahash, which means that it may still be profitable to run in low cost environments and save, another 6 months of operation with them. So that's kind of the general take on firmware. I'm obviously not a firmware developer myself, but that's kind of my finance angle from it.
Yeah, you jailbreak these machines and make them more efficient in one way or another. And that's what there's always these conversations, like the Alex Levin and what's the other guy's name?
Finish.
Yeah, they really, it's really sketchy in that regard. But if you talk to other miners, whenever a new model comes out, hopefully you have a developer on the team who can sort of break into it and try to play around with the firmware and figure some stuff out. And it's crazy to think if you are successfully able to do that and you're considerable size, you could significantly increase hash rate without adding a single miner to the network, all things held equal.
Yeah, a lot of the big companies do it themselves in-house. It takes a really smart person to build firmware. Like the Levins and Vineshes of the world, there's not a lot of them. They're geniuses, at least with firmware. That's probably why they have low AEQ. And, you see some of those Telegram chats where there's like death threats or like bounties being put out on Bitcoin Cash, or like, I think one of them threatened to go stab the other one in the next mining conference. It's the firmware Telegram chats are probably a dark place to be. Probably the darkest area of mining as a whole.
There's some dark areas too, but they're getting brighter. I'm confident. I mean, I'm excited too, because when you think about, there's a bunch of things going on right now at the same time in the Bitcoin mining industry. From a maturation perspective, we've talked about the hedging products, obviously not fully fleshed out, not fully brought to market, but that ball's rolling. And then what I'm really excited about from our perspective is you're going to get, like, I'm very confident, like, institutional money will come to invest in mining infrastructure in North America, but then what comes with that, like you were describing, like the quants and the profit switching, that'll come. And then from an engineering perspective, like once the oil and gas, sort of petroleum engineers and chemical engineers and electrical engineers start putting their minds towards this stuff, I think we're going to see things that we can't even fathom in terms of efficiencies and creativity with using this hardware.
I agree. We're only just now unlocking the potential of the West into mining, so very excited to see how this goes.
Yeah. We got through your whole list. Ethan sent me over like a list of topics to cover. I'm surprised we hit all of them already, except for the last one, which is like getting rig data, like pulling data from the miners. And sort of shifting priorities based on that. What are your views on this?
for us, like the hashrate index project, which is like a Luxor spin-off and data website, it was really just a play for us to help professionalize the industry. There's long-term benefits to us like helping the industry become more professional beyond like monetizing a data site. Like our end goal is to like bring in like new types of players into the market in the US, and this data site will hopefully help them get in. So the rig price index is like one aspect of that. Like you were talking about a GAM, like when you're looking at machine prices, it's really hard to determine like when to buy the machine, if it's properly priced, like how does that change over time. It's very daunting because these manufacturers are so opaque with everything, pricing, like shipping delay, pretty much everything involved in the process. So we figured like if we can aggregate all these machine prices over time, it could drive some interesting insights that would help miners make investment decisions, give sanity checks on like dollars per terahash right now, or where the market's standing in terms of capex. It also helped like different types of players, like financiers who are now taking ASICs as collateral. ASICs are a crazy collateral to take. It's unlike any traditional leasing business. Like these ASICs can fluctuate in value like 70% in a year's time, or even in like a few weeks. They actually they could. So being able to use historical data could help them determine like, okay, how do we actually value this collateral on an ongoing basis? Like we revisit every 2 weeks, and like how do we mark this down as time goes on? So I'm probably just listing off a couple, but I think there's going to be dozens of use cases of this data for people that are looking to kind of expand into mining.
No. Thank you for putting this site together and gathering this data, because like we were discussing before we hit record, that's, and what you're just alluding to right now is a GAM, as we're trying to raise money and scale. It's one of the big questions we get is what collateral you're going to use. Is it going to be the gen sets, the miners, and the miner is even worth collateral? So just to even begin to broach that conversation, you need to have historical pricing data on the machines, pair that with price of Bitcoin and difficulty and hash rate at any given point in time, and sort of back out and say like, hey, prove that you can buy miners at certain points of time. And yes, they may be not the cheapest that you could ever get them, but you could still be profitable. And that data just hasn't existed up to this point. I know Leo Zhang at Annika Research, in one of his most recent blog posts, was able to get pretty granular historical pricing data on S9s, but beyond that, I haven't seen anything too robust. So to see you guys start putting these data sets together and making them public is huge.
Yeah, well, we appreciate guys like you for supporting us in this initiative. It wouldn't be anything if people didn't actually find it useful. So it makes me really happy to hear that. And yeah, for listeners, it's all publicly available data. So you can head to hashrateindex.com and just take the visualizations for different efficiency buckets of rigs and use that data as you wish.
Yeah. What else do you got? So this is an MVP. What's your long-term vision for this data site?
It's pretty user-driven right now. Like we just want to build cool shit that miners like. So if you have like things you want built or want to see, like let us know and we'll try and build it. Right now we're working on a few different things. One, like the Asic reviews. So Steve Barber from Upstream Data, he reviewed the S9. It was like one of the most amazing reviews I've ever read. It was crazy. I mean,
sleeping in with your hash rate board under your pillow.
Yeah, he was trying to decide the title between like he was trying to rate the S9 like the title either one ASIC to rule them all or like the AK-47 of ASICs. So that was probably the toughest decision he had to make.
Well, and again, it gets back to ASIC lifecycles and the future of the hardware. The S9, love them or hate them, Bitmain, it is an incredible machine that is still profitable to this day for some people. And that's why, full disclosure, we're bullish on MicroBT and What's Miners, because the designer of the S9 is co-founder of that company. And so how do you think moving forward as these ASICs become commodified, like how long do you see these life cycles extending? So right now the S9's what, on year 4, right? 4.5 years about.
Yeah. I think you got to pick good machines, like the What's Miner, like the machines you're picking, I think are good horses to bet on. Not every machine is going to last 4 years. Like if you buy the latest like Canon machine, I don't know. I don't know how long that's going to last. Maybe a few months. But I think there could be some machines as chip technology slows down that you start to see 4 or 5 year timelines, and even going further than that as chip sizes decrease. And as Steve highlighted on his review on hashrate index, really the S9 was a pivotal time where you move from like a purely CapEx business to an operational business. And now you really gain competitive advantages in your OpEx and how well you can run your operations as the machine life cycle gets longer and longer.
Yeah. I mean, it was somebody, I forget who, I wrote about it in the bent, but somebody brought the original S9 announcement on bitcointalk.org to the surface a couple weeks ago, and it was hilarious seeing people's reactions to the original announcement and pricing for the ASIC compared to what actually ended up happening at the time. Life cycles were what, like 6 months max.
Yeah.
And people were complaining about, why would I ever invest in this if it's only gonna last 6 months, most likely.
Turns out to be like by far the best ASIC purchase of all time. If you got it in 2016, you ran off like a bandit.
Yeah, no, and it just highlights how early we are. And would you define that as a mispricing of risk at that point in time from those miners who were questionable of it? Like how, like, do you think we'll see another instance where it's like, why am I going to invest in that if it's only going to last 4 years? It ends up lasting like 8 years or something like that.
The mining market is not what it was 4 years ago. Not to say it can't return to that level if we see a huge price appreciation and manufacturers can't catch up. But the economics are definitely different now than they were 4 years ago. I still think there's outsized returns for good operators like YAM or like Steve at Upstream Data to plug in machines regardless if they're new gen or old gen and still make outsized returns. I think Bitcoin mining is an incredibly good investment play, especially in the environment where investors are chasing yield. I think it's going to be still a very good investment for people to make if they can run operations efficiently. And that's like a big if, because there are really good operators out there, but there's also dozens of really bad operators. And to be honest, I was one of those bad operators in 2018. We opened a mining farm.
I was just going to say, you got to tell your story.
We invested in a mining farm in like run up of 2017. Our Excel spreadsheet, I mean, I'll tell you, man, our Excel spreadsheet was awesome. If you looked at our spreadsheet, you would be like, this is going to be the best investment ever. And so that's when we put money in, height of 2017, when network hash rate wasn't that high. Bitcoin price was obviously incredible. We bought a 40% stake in a 2.5 megawatt farm in Kansas City. It didn't end up going so well. I mean, we were kind of all green to it. We didn't know what to do. I spent like a month and a half living down in Kansas City with Nick Foster from Kaboom Racks, like eating Pizza Hut every day, trying to turn this mining farm around. But like we couldn't combat the Kansas City heat and like the underinvestment and like dealing with the entirely environment that none of us had ever built before.
Yeah, weren't you guys like holding up cardboard to have the airflow go a certain way?
Yeah, I was blowing on miners to cool them down and pulling out pen and paper and custom, like personally solving hashes to increase our hash output.
I mean, but that's similar to like a lot of early mining stories. I mean, at GAM, like we were no smarter when we first. I mean, we're much smarter now than we were when we first got into it. When we first got into it, and I came in later, but Todd was under the assumption that, yeah, we just daisy chain these, plug them into a wall, it'll work. And it's like, We bought Dragon Mints. We've made some mistakes, but if you're willing to tough it out and go on the journey of really understanding this market, which we're pretty confident we do now at this point, it is worthwhile, especially considering the energy arbitrage opportunities that exist out there, particularly here in North America.
Yeah, every miner earns their stripes at some point, and those stripes like will help you develop like a lot of the things we think about at Luxor in terms of hash rate derivatives and hedging out based on the value of hash rate. We wouldn't have recognized that if we didn't go through a mining farm failure ourselves and see like what are the main failure points of these operations. We went into an environment where the value of hash rate was significantly higher than what we ended up with. So I think like all of these things really, they add value in experience. So as long as they're not too costly and they don't bankrupt you, they're not a bad thing. You can keep going on, keep building, and ultimately just build better and better products.
Yeah. And I think that's actually another good point to drag into the sophistication of this industry is it feels like, at least to me, that more miners, especially here in North America, are being open with each other about not full details on operations, but hey, be aware of this, be aware of that. Maybe you can avoid some of these missteps that we made. I think the conversation is definitely more open than it has been in years past.
It's amazing to see how much miners are helping each other, because technically it's a zero-sum game, but we're also heading into an environment where there's a lot of BD going on, some consolidation, a lot of business partnerships. So building like real relationships where you're helping out fellow mining companies, I think is always valuable, especially like supporting other US-based companies. I think yes, it's a zero-sum game, but we can grow in some ways together.
Yeah, no, I think we do need to grow. I think that's, at least in the North American Bitcoin mining community, like the oil and gas Bitcoin mining Telegram group is where I see a lot of this going on. It feels like there's an urgency to get stuff deployed here in North America just for the long-term health of Bitcoin. And there also seems like a bit of camaraderie, like, hey, like there's a chip on a bunch of people's shoulders because America and North America, Canada's involved in this too, and Mexico to some extent have really lagged behind in terms of Bitcoin mining, and people are like, oh, how do we miss out on this, and we need to catch up. Yeah,
I think Canada had like an early boom. Obviously I'm Canadian, so I want to take pride in my country, but you're seeing now like just the level of infrastructure being built out in the US, it's gonna very quickly surpass Canada. Like the first real mining was done obviously Washington State, but also Quebec and Canada. And then you saw huge companies like Hut 8, Bitfarms, all build out in Canada. But I think a lot of the growth now will be in the US. Better energy systems, like Canada is pretty overly regulated at this point. We do have cheap power, but the government doesn't let us get it for that cheap. So I'm super bullish on Texas, upstate New York, Nebraska, everywhere in the US, I think, is pushing. Maybe besides Washington State.
Yeah, I mean, let's hope. I mean, all things considered right now, the climate in America, the political climate particularly, I hope we don't shoot ourselves in the foot. Thank God we have Texas. Hopefully Texas is a huge holdout. And then actually in the Bakken too, like North Dakota and South Dakota are pretty states' rights oriented as well. Here's to hoping that the government doesn't fuck it up here, because like you said in the beginning of the podcast, that's your biggest worry. So what particularly are you worried about from the government? And this is something actually we've had conversations about one-on-one in the past off the record about like whitelisted mining pools. Like I view that as a potential attack vector. Would you agree there?
Yeah, I listened to your podcast with or Rabbit Hole Recap with Matt the other day where you guys talked about this. I think he brought up a good point that as long as there's different pools that are operating on different censorship lists, like maybe China censoring everyone with like a free Hong Kong address, or I don't know, but US is censoring people with OFAC sanction address. As long as it's not all the same, it doesn't pose existential threat to the network. like people's transactions will still get included in blocks. It may take a bit of time, but it's going to happen. I do think that it's against the ethos of Bitcoin for sure to censor transactions, but unfortunately, that's just like a reality of the U.S. and Canadian regulation system. Is that as regulators view the space, it may become necessary for some participants to enter. Maybe not everyone, like a GAM, but maybe in very regulated firm, like a BlackRock or Fidelity or something in that nature. Like maybe they'd be forced into a position where they have to use this. So I'm dancing around it. I think it's against the ethos of Bitcoin, but I don't think it's an existential threat because like it's still going to be there's going to be different pools operating with different lists.
Yeah. And how much of this would matter in a world where something like CoinSwap or CoinJoin is more commonplace, and the chain analysis heuristics are sort of bunk? Like, does it even matter at that point? Would you even be able to do that?
Yeah, I think that benefits it. Like, then like the idea of these like addresses that are blacklisted, like it would be harder to find them, and so you as a miner wouldn't need to worry about them. I love that you guys are pushing that angle. I mean, again, I don't want to show shitcoins on your podcast, but like that's one of the reasons I actually generally like Monero, is because it has that built-in layer of privacy. But I think you're doing a good job pushing like these other products that can bring that to Bitcoin, and I think that is important. The censorship resistance is why Bitcoin is so valuable. Every currency is going to have some bad actors in it. I mean, US dollar has terrible actors using US dollar. So it's an unfortunate reality that it's going to be used by some bad people, but it shouldn't let us get away from the fact that Bitcoin is valuable because it is censorship resistant.
Yeah, totally. Yeah, Deutsche Bank, not KYC AMLing Jeffrey Epstein while he was wire transferring money to sell sex slaves. Two-tier justice system, Ethan. It rubs me the wrong way. Why are we subjected to all this shit when the pedos get to run wild? That was my pedo rant of the podcast. Sorry for making things awkward. But what outside of mining do you like to focus on? I mean, obviously you just touched on privacy a little bit, but in terms of Bitcoin enabling certain economic activity or new use cases from a tech perspective, what are you paying attention to outside of what you guys are working on in Luxor, if you even have time?
Yeah, I'd caveat that by saying most of my time is spent in mining. Probably like 95% of my working hours are in mining. It's an industry I love so much, and that's why I left Goldman to go pursue it full time. It's fascinating from an economics perspective, which I think is one of the reasons you got in with GAM too. But also it's just like you have this sense of greater responsibility. Like we do see ourselves as guardians of proof of work networks. And we have deep conviction in a lot of these projects, so we want to protect Bitcoin. And so in some ways we feel like, very ethical in our day-to-day business, like we're contributing to the greater good. And yeah, we're just kind of lowly miners that are securing the network, but I do think it's a very important part of the overall system. And then everything else people are building on top, like Lightning Network, all the use cases, that's extremely valuable too. Hats off to everyone building that. I think that's critical for the adoption of Bitcoin. So I've been observing those trends, and I'm happy with how they're going. But so far, most of my focus has definitely been on mining, and how can we improve the mining layer and have a more secure network.
Yeah, this actually brings up a good point. Like Lightning Network and other similar second layer solutions. I've been pushing this theory that Jevons paradox can be applied to Bitcoin UTXOs, and I guess as a mining pool operator, it'd be remiss of me not to ask you about fees in the future, and do you worry about the subsidy falling to a point where it's not profitable for you guys to operate?
A lot of people in this example bring up if more institutions come in, it's going to suck up like transaction amounts, because either these institutions like Fidelity are long-term holders, or they're doing trades off venue, like, you know, through BlackRock, and large institutions are trading there. And that's an example where there'd be a decrease in transaction fees because there's a decrease in transactions on the network. I think there's going to be two counters to that. One, because of the adoption of those large institutions, there's going to be like more use cases for Bitcoin, and then more people are going to start using it and transacting with it, which will help offset some of that pain that miners feel. And then the second is that if they come in a big way, I think we should see a price appreciation. I don't want to speculate too much on price, but if there is widespread adoption, I don't foresee a future where we don't see a large run up in price. So hopefully those two will counteract that. And really long term, like, that plays into the theme that as block reward decreases, transaction fees need to increase on a USD basis. So that can either be more people transacting on the network or price appreciation for Bitcoin itself. And I'm bullish that, you know, one of those two will happen.
I am as well. And that's actually another topic I like to think about a lot. Like, at what point in the future does BTC become the unit of account, or Sats become the unit of account, and you don't even worry about US dollar profits, but literally just worry about stacking as many Sats as possible? It's actually, full disclosure, that's our goal at GAM, and our goal is to stack Sats. We want to sell exactly what we need to cover expenses, and then hodl the rest.
For miners, that becomes a reality as soon as electricity grids start pricing and their electricity in Bitcoin. As soon as your costs are locked in Bitcoin, then you don't actually care about your revenue in US dollars. Like, if I got to pay, you know, 0.001, I'm getting this off by a few decimals here, but 1 Bitcoin per kilowatt hour, then, like, yeah, it's on a Bitcoin basis for sure. That'd be a cool future. I guess guys like yourselves are the ones that are pushing that forward. So,
well, I would not be surprised if it happened sooner than people think. Again, just because, like, of the waste gas alone, like the opportunity cost that needs to be weighed by these producers is, do I compress it into an NGL? Do I flare it? Do I build a pipeline and send it to the grid? And now, do I mine Bitcoin? And the data that we've collected from being live for a considerable amount of time now, it is becoming glaringly obvious that they can get a lot more bang for their buck mining Bitcoin with that gas, as opposed to any of the other alternatives that I just mentioned. And we haven't talked about this internally, but just like myself personally, like, there's got to be a point relatively soon where things click off in their head, like, oh, I don't want to sell this Bitcoin. Like, I'll sell you the gas for some Bitcoin. Like, keep the cash out of it. I think that's where, like, Bitcoin as a unit of account, like you just described, will start, is with these energy producers. And they are some oil and gas industry. That's what we like to say. Oil and gas industry and Bitcoin go hand in hand very well together, because they both represent ruthless capitalism. And part of being a ruthless capitalist is not having any apprehension of adopting new technologies, in this case, and new money, and using that as a unit of account. So I think next 5 to 10 years, wouldn't be surprised if energy in some parts of the U.S. is being priced in Bitcoin.
I love that. An interesting little trick here you could do, and what we used to do at our mining co-location is, like, we had a bunch of technicians that weren't that interested in Bitcoin, but as like a bonus, we gave them all like a machine of their own. Like, okay, you can't sell this, you have to manage it, set up your wallet, hold your funds, like, do whatever you want with it. And we just gave them like ownership. Like, you could give some of these oil and gas guys, like, here's your personal machine, I'm gonna write your name on it. Like, you have to like set up your Bitcoin wallet, like start stacking sats, and like, it's on us, that type of thing. And like, even one machine, I think, is enough to get people interested and engaged. And that's how a lot of like people get into crypto, is through mining. So I think it's going to be a really nice onboarding into Bitcoin in general through mining.
Yeah, no, it's actually funny. My uncle He's been like big computer builder his whole life, and that's how he's gotten it. He like with even without me sort of nudging him towards Bitcoin, just like mining. He had a bunch of GPUs sitting around, plugged them in, and he's been hooked for a few years now. And whenever I see him, he'll like show me his. I think he points his GPUs at Nice Hash or something like that. He's like, "Look how many sats I stacked this month." I'm like, boss.
I love that.
It's been a fascinating conversation. Have you heard anything about the Three Gorges Dam? Was that just some FUD?
I've seen some good write-ups. I think Ben from Bitfarms, Ben Gagnon, had a really nice post on the oil and gas group covering it. I think I'd agree with him that the Chinese government will try everything not to let this like turn into a disaster. So it's an interesting development to watch, but I think they'll protect it.
Has anybody figured out the potential amount of hash rate that's in that flood zone yet? Or
I've seen estimates that it's in like double-digit exahash, which isn't surprising, but I don't think anyone's actually gone through and done it for real. You'd probably have to talk to someone like Thomas from F2 Pool, who has like he knows where all these farms are located and has probably been to visit them.
Yeah, man, it's a crazy world. Bitcoin mining, it's getting more sophisticated, but there's still a lot of and that's the way it should be. You shouldn't really know where all this hash rate is physically located down to a granular like GPS coordinate level.
Yeah. On the topic of F2 Pool and other pools, I better run here pretty quickly, or else they're going to steal all of our miners.
All right.
As we speak,
I'm sorry.
Probably poaching them all.
Well, I'm sorry for pushing this a half hour. Thank you for being flexible there. And thanks for your time, dude. This has been a fascinating conversation. I think everybody's going to walk away from this being a lot smarter when it comes to Bitcoin mining.
No, thanks for having me on. Yeah, this was really fun.
Yeah. Do you have a final note, or where can we find you for the freaks out there?
Yeah. You can find me on Twitter at Ethan_Vera. And if you want, you can check out our new data website, hashrateindex.com. So we're, as we said earlier, like really trying to build it based on users' needs and wishes. So if you have an idea on how to improve it, or you want to see some cool new data set, just ping me and we can try and add it. So yeah, I appreciate all the support.
Bang, bang. Thank you for doing what you do. I'm sure this won't be our last conversation on air. Yeah. Go make sure that your hash rate isn't getting stolen from under you.
Thanks, Marty.
Thank you. Peace and love, freaks. You too.